Okay. What I'm going to do, I'm going to focus on question 1 or activity 1. It's activity 1. It's on page number 5. The income statement, that's what the question is all about, and they're also asking for us to do the note for retained income. Okay. So learners, it's on page 5 in the question book, and then in your workbook, the accounting workbook, it will be on page 3. Here, we give you the layout of the income statement, and then all you have to do, you'll have to fill in the adjustments to get to the answers. Some of the figures are already in, so it should be easier for you as we go along. Okay? So as in accounting, we always press for time, so let's get into it immediately. Okay, so we're looking at adjustment number 1. Okay, the first adjustment, it says the auditors are owed a further 7,500. So if you look for the item in the income statement, then the auditors has got to do with audit fees. Right? So the audit fees item, the figure we have to take straight from the trial balance, which for audit fees is an amount of 88,000. But the adjustment says that the auditors are owed a further 7,500. So audit fees is an expense, and they are owed a further 7,500. Therefore, it's going to be an accrued expense. And as we know, if the item is accrued, we have to add 7,500 to the total in the trial balance. So it's 88,000 plus 7,500 gives me 95,500. Okay, that was a simple, straightforward adjustment. So it should go a bit easier as we go along. But those are definite points that you can score at the end of the year. Okay. Then we go on to adjustment number 2, which talks about goods are sold, meaning that is the selling price, at a markup of 60% on cost. Okay. So as we know, in order for you to get the selling price, you have to take the cost price and add the percentage markup. Because nowhere in the question do they give me the sales figure, which is the selling price. But what they do give is the cost of sales, which is the cost price. So I have to take the 8,200,000 and you have to add 60% to that. Right, so 8,200,000 plus 60%, meaning you have to calculate 60% of the 8,200,000. So on our calculators, it will be 8,200,000 times 60%. This part is 4,920,000. Therefore, in order for us to get the selling price or the sales, it will be 8,200,000 plus 4,920,000. Okay. That will give us 13,120,000. That will be the sales. But the adjustment goes a bit further. It says that the company held cash sales and they had discounts during the year because there was stock in excess. And then the total trade discount that they gave the customers was 702,000. Therefore, once you have your sales figure of 13,120,000, you have to minus whatever trade discount was given and if there was any debtors allowance in the nominal account section. Right? There's only the 702,000 that you have to minus. So your net sales after you've given the discounts came to 12,418,000. Then we can go a bit further because we have the sales minus the cost of sales. That will give me my gross profit of 4,218,000. Right. Just to recap quickly that adjustment. They want us to calculate the sales. So in order for us to calculate the sales or the selling price, we have to take the cost price, which is the cost of sales, and we have to add the markup. So it's 8,200,000 plus 60% of 8,200,000. The 60% portion, that comes to 4,920,000. So I'm adding my sales, but this is before any discounts. And then you have to minus the discount to get your net sales, and that will be 12,418,000. Minus the cost of sales, then you'll get your gross profit. Right, so far we have adjustment number 1 and adjustment number 2. That was fairly simple. Adjustment number 3 talks about packing material. So we have to write in the item packing material. The adjustment says packing material to the value of 41,000 was used. The word that's important here is 41,000 was used. They are not giving us the amount of packing material on hand. They're telling us that 41,000 is the amount that was used. So the 41,000 will be our expense for packing material for this year. So the packing material, that is the amount that was used. But as we do, we start with the figure in brackets for packing material, which was 43,900. The 43,900 was the figure in the trial balance. They did not say how much packing material is on hand, but they said that the packing material used for the year is 41,000. So if we want to do, we can go and calculate what was the packing material that was on hand, which in this case was 2,900. Normally the adjustment is, that's the amount of packing material, and 2,900 is on hand. Then we have to subtract to get the amount that was used. In this case, the adjustment said that packing material of 40,000 was used during the year. That's why the 41,000 will be the answer in your income statement as the expense for the year. Right, the next adjustment, number 4, talks about interest on overdraft of 2,800 is included in the bank charges. So if we look at the bank charges is 31,000. So included in the bank charges is a figure of 2,800 that belongs to the interest expense portion. So if we look at the income statement, the extra part at the bottom that is left open, it starts with operating profit. Then the next line, it's blank. Learners, you will have to fill in that. That will be interest income. Then we get the profit before interest expense. Then we have a blank. That's the line that you have to fill in. That will be interest expense. And it says net profit before tax, blank, net profit after tax, So the blank will be the income tax. Right, and the adjustment that we are dealing with has got to do with the bank charges. So we're writing in bank charges. The amount in the trial balance for bank charges is 31,000. Included in the bank charges is an amount of 2,800 that belongs to interest on overdraft. So we have to minus it from the bank charges and we have to add it to the interest expense portion. Right, so 31,000 minus 2,800 gives us 28,200. So the bank charges amount will be 28,200. And we have a start for the interest expense. Pending whether there's more adjustments for interest expense, we will just have to add the 2,800 to get to the total of the interest expense. At the next adjustment, it says no entries have been made for stock stolen at the beginning of June. The insurance company has informed Salati Limited that they have transferred 32,000 Rand into the business's bank account in respect of the insurance claim. Salati Limited pays 20% of any stock loss. Okay? So they're saying that they pay 20% and the insurance claim and the insurance company has transferred an amount of 32,000 Rand into the business bank account. So if we look at the items in the income statement, we'll have a new item called stock loss due to theft, or sometimes there might be the item stock loss due to fire. But they don't give the calculation, they don't give the amount of stock, so that is what we have to do. So we have to calculate how much stock was stolen. The information that they give us, they're saying 32,000 Rand is what the insurance has transferred. And we have to bear the loss of 20%, meaning the insurance portion is then automatically 80%. Right, so 32,000 is equal to 80% of the trading stock that was stolen or that was destroyed. Therefore, we say 80% in decimal forms is 0.8. So we're going to say 32,000 equals 0.8 x. When we solve for x, therefore x equals 32,000 divided by 0.8, x equals 40,000. So that is the stock or the trading stock that was stolen. Right, so the trading stock stolen was 40,000. The insurance paid out 32,000, which means we have to bear the loss of 20%. So 20% of 40,000 equals 8,000. So the stock loss will be 8,000. So if we in our income statement, the item stock loss due to theft will now come to 8,000. Okay, that's a fairly tricky adjustment. So learners, we must make sure that we know how to calculate. We first of all want the 100% of the stock that was lost or stolen, and then we calculate the 20%. So 20% of 40,000 gives you the 8,000. Okay, there are various other ways to calculate, but at the end of the day, we will come to the same calculation. But this way, we know exactly the total amount of the stock that was lost. We know the 32,000 the insurance company paid into the banking account, and now we know that we have to be the loss of the 8,000 rand. That is why we take the 8,000 rand to the income statement as the stock loss due to theft over there. Right. Adjustment number 6 talks about a physical stock taking on the 30th of June reflected the stock to the value of 1,475,500 was on hand. That means that is what we have left according to our stock taking. So the item over here that will affect the income statement will be the trading stock deficit. So we have the item trading stock deficit. We will start with the value of the trading stock in the trial balance. That will be 1,534,000 minus the stock that was stolen, and then we minus whatever we have on hand, which is 1,475,500. We close the bracket, and then we get an answer. It's 1,534,000 minus 40,000 for the stock that was stolen, then minus the 147,550. So the trading stock deficit will be 18,500. Okay, so again, the 1,534,000 is the value of the trading stock in the trial balance. The 40,000 comes from the previous adjustment, where we had to calculate the total of the trading stock that was stolen. That we have to deduct from the trading stock, and then we minus the amount on hand to get the trading stock deficit. Adjustment number 7. It is an amount of 1,700 was received from M. Mopani and had been credited to the debtors control, meaning that they deducted the 1,700 from the debtors control, because as we know, debtors control will have a debit balance, and because it was credited, they minus the 1,700 from the debtors control. The adjustment goes further. It says the account of Mopani was written off as a bad debt during May. So in May, it was written off as bad debts. Then the debtor comes back to pay his account, but he's no longer a debtor. So this item will be called bad debts recovered, which will be an income. Right, it will be bad debts recovered, and it will be an income. So we go back to the income statement. Under our income, the first item under the income will now be bad debts recovered. Bad debts recovered, it's got nothing to do with the bad debts. The bad debts is an expense. The bad debts recovered will be an income. If there's no opening total in the trial balance or bad debts recovered, then the 1,700 will be the only figure for bad debts recovered in the income statement. But again, it says that the 1,700 received has been credited to the debtors control account, meaning that they deducted the 1,700, but the 1,700 was supposed to be recorded as bad debts recovered. That is why now we have to record the 1,700 as bad debts recovered in the income statement under the income. But also, we have to go and fix the mistake, because the debtors control account, they deducted 1,700 and then they came to that figure of 521,300. So to correct the error, we have to add 1,700 to the debtors control. So the balance or the total of the debtors control, so your debtors control will be 521,300 plus 1,700, which gives you 523,000. Learners, why do we use the debtors control? Because the very next adjustment will talk about the provision for bad debts. And that provision for bad debts will be 4% of the debtors. Not the 4% of the 521,300, but 4% of the new balance or the balance of the outstanding debtors, which is 523,000. So we calculate 4%, so it's 4 over 100 times 523,000. So it's 523,000 times 4%. That gives you 20,920. So the balance of the provision should be 20,920. But in your trial balance, the balance of the provision is given as 22,000. Right? The balance of the provision in the trial balance is given as 22,000. So what's happening to the provision? It is 22,000 given. So how do we move from 22,000 to 20,920? We obviously have to minus the difference between that two will be 1,080, and it will be a decrease in the provision. The provision given in the trial balance is 22,000. We calculated the 4% of the debtors, which came to 20,920. 20,920 should be the balance of the provision. Therefore, the provision is decreasing. It has to move from 22,000, which was given in the trial balance, and it will have to go to 20,920. So it will be decreasing with 1,080. So the 1,080 will be the item that you're going to take to your income statement. And because it's decreasing, it will become an income. Okay. If the item was increasing, it was going to be an expense. So in your income statement, your first income was bad debts recovered. The next income will now be provision for bad debts adjustment. That will be 1080. Right, that takes care of adjustment number 7. Adjustment number 8 says one employee was omitted from the salaries journal. They give the details of his salary. They say that the net salary is 4,980 and the deductions is 2,020. So if I look at the net salary and I look at the deductions, then I can easily calculate what is the employer's gross salary. So the gross salary the deductions, and then the net. The deductions is 20,020. 4,980 is my net. So the gross, I'm working up. So I have to add. The gross will be 7,000. So how does that affect my income statement? We have the line item, salaries and wages. Opening total according to the trial balance is given, and that will be 788,000. Plus the 7,000 of the gross that was omitted gives me 795,000. Right. Then also the adjustment speaks about the employer's contribution. This is how much the company is giving towards the employees. And for the company, the employer's contribution will be regarded as an expense. So the 1,610 will appear in your income statement as employer's contribution, and you'll have to add that 1,610 to the existing total that is given. So the existing total is 81,000 plus the 1,610 gives you 82,610. That's a common adjustment that we find from grade 10, and it surfaces in grade 12 as well. Adjustment number 9 speaks about the easy builders was paid 105,000 for the construction of a storeroom, which cost 80,000, and repairs to the paving, which cost 25,000. So the 80 and the 25 makes up the 105,000. It goes further. It says the entire amount, the whole 105,000, was debited or added to land and buildings in error. So the line item that will affect the income statement will be repairs and maintenance. Is trial balance figure for repairs and maintenance 125,600. And we have to add the 25,000 that was added to the land and buildings by mistake, and that will give us 150,600. Adjustment number 9 speaks about the loan. They say the balance of the loan at the beginning of the year is 1,470,000. Repayments during the year is 840. The repayments will have to be deducted from the balance at the beginning of the year, because since we are paying back the loan, the balance should decrease. So if I use my calculator, 1,470,000 minus 840,000 the balance of the loan should be 630,000. So the balance of the loan should be 630,000. So it's 1,470,000 minus 840,000. That gives me 630,000. But the balance at the end of the year for the loan is 750,000. So there's a missing figure there, which is the interest that was capitalized. So the missing figure is obviously then 120,000. So 750 minus 630 gives me the 120,000. In the 120,000 will be added with the 2,800, it gives me 122,800. Right, learners, so the 2,800 was the previous figure of the interest on overdraft plus the interest on loan, gives me the total interest, which will have to go in brackets because I will eventually have to deduct the interest to get the total. Also, seeing that we are in the income statement and there are some figures given, we can easily calculate the adjustments. So just for the time constraint, it says depreciation is the missing figure in the income statement. So we will have to calculate the depreciation. But adjustment number 13 says after all the adjustments were taken into account, the correct net profit is 588,000. And that income tax rate is 30% of the net profit before tax. So if we go through the income statement quickly, it says that the income tax is 30% of the net profit before tax. So that then becomes 100%. Meaning that the net profit after tax is therefore 70%. So 70% of a figure gave us 588,000. So 70% of a figure gave us 588,000. So 70% of a figure gave us 588,000. So 70% in terms of decimal is going to be 7x equals 588,000. So x will be the profit before tax. It gives you 588,000 over 0.7. That gives you 840,000. So the profit before tax will be 840,000. So we can easily fill that figure in. The net profit before tax will be 840,000. Then we can go ahead and calculate the 30%, and that will give me 252,000. Or you can take the 840,000 minus the 588,000, and that will also give me 252,000. Okay, there are still a few adjustments that we have to do. Okay, it should be just the rent income. The figure in the trial balance is 69,160. This is a fairly difficult adjustment because it deals with the increase of 10%. The adjustment says 69,160 That equals 13 months, but not equal 13 months. Meaning it's not 13 equal months rent, because there was a 10% increase on the 1st of May. And because they don't give the rent, we unfortunately have to go and calculate it. So we're saying, let the monthly rent equals X or 1X. So for 10 months of the year, the rent remained the same. The rent increased in May, so you got a 10% more in May, in June, and in July. So it's 1,1x, that's the 10% more, and that gave me 69,160. If I work this out, comes to 13,3x equals 69,160. X is therefore 5,200. That's before the increase, plus the 10%, which is 520. So 5,720 is the rent after the increase. So if I look at the adjustment, it will just be minus 5,720. So it's 69,160 minus 5,720. So it gives us 63,440. Okay, learners, so all we have to do now, we just have to go and add, and then we can complete the income statement. The missing figure in the income statement will then just be depreciation. Okay. I hope today's presentation and working out of the examples will help you with the exams forward. I wish you everything of the best for your accounting exam, and hope to see you with the next accounting assessment. Thank you very much. Goodbye.